Are there benefits? Sure. And they state them. They're manufacturing work, steel demand, and engineering contracts, refinery activity, long-term pipeline operations. Who owns it now? So, Mike, I'm having my coffee the other day.
Yeah.
And I'm reading this article, and it's about foreign investors who have bought Canadian government debt at a record pace in April. So, there's a lag between reporting on all this stuff. So purchasing 46.9 foreign billion in Canadian securities overall, which kind of caught my eye. And I thought,
what was that number again?
Well, this is total security. So this is everything, right?
Yeah.
But these are foreign investors coming in. But the thing that really caught my eye was that the Government of Canada bonds now have an ownership stake of 43% by non-resident Canadians.
That's a really, really high number.
Right. So, and welcome to the show. I just jumped in, but and everyone, welcome to the show.
Thank you so much.
True Patriot Loves. Very happy to have everyone watching today. But this one's a really interesting one because right away, when I see something like 43% of bonds are owned by non-residents, my mind asks, and this is my accounting brain, it says, well, what are the total amount of Government of Canada bonds?
What do we have out there?
So we now have $1.48 trillion. Now, this needs to be updated, but that was the end.
$1.5 trillion in...
Coming into 26, we had $1.48 trillion of government bonds. So, those Government of Canada bonds we used to buy. Remember when we were kids?
Oh, yeah.
Yeah, we all had bonds.
Yeah.
Our parents, learned the bond market, would buy a bond.
It seemed to be like the bond market was primarily owned by Canadians.
Right. Well, we did, right?
Yeah.
We all bought, and for some reason, I don't know why, that went away.
Yeah, it did.
So, you don't say to your kids anymore, get a government bond. But, there were Canadian savings bonds. We all used to buy them. They had a low interest rate. But it's kind of how you entered the investment world to learn a little about the market, right? So time went on. These started to get bought up by foreign investors. So if you have let's say 1.5 billion now. It's a little over 1.5 trillion.
Trillion, yeah.
Right? 43% of that is now in the hands of foreign investors.
So roughly $600 billion is held by foreign investors.
In Canada, yes.
Almost half of the bond investment is held by foreign entities.
Right. So governments go out when they need money. They go out and borrow money in the marketplace. So half of it, or 43% of it, is now owned by U.S., Asian, German, other countries, and also other investment arms in other countries.
How do we work these bonds? Like, do we have to say, okay, here is a national project specifically?
No.
No.
We go get a bond rating for so we basically say Canada has a bond rating of like AAA. Therefore, this is a good bond. It's a safe place to do business, which I find very interesting, given the fact that our debt in the country is about $1.27 trillion.
So we're already underwater with what we have out there in bonds.
Right. Well, and we're the third. I took a look. So then my mind goes and says, okay, are there any other countries that have foreign ownership higher than us? And there's only two others, which not a good example, is France and Germany. So we're the third. So our 43% is like the third highest saturation or content of foreign ownership of government bonds. So then I thought, okay, how do I feel about that? So I started looking into it.
Kind of feels like we've lost a huge chunk of our financial sovereignty to ownership in other countries. Probably primarily the U.S.
Yeah, a lot of it is they seem to be the April. So in April, Government of Canada bonds out of the total investment in securities accounted for $27.7 billion. So they bought a lot of bonds. So someone or some people, they don't say specifically who, they tell you the countries that buy them or the places of the companies that buy them, where they're from. But roughly, it was a record coming in, and most of them are from the U.S. and Asia.
So, is there a limit that we will allow? Is there, I mean, at 50% foreign investment, we stop it. Is there any place or any indication that we would do that?
No, we don't seem to have a, no one's, there's not a law or a guardrail
There's
or
no,
anything.
there's no mechanism to.
No, no. We do say, this is the interesting part, and I've always heard this, but I've never tested the theory on it. They say, well, Canada, the foreign countries and companies from foreign countries like the bonds because we have a high bond rating.
Okay.
A AAA bond rating. We're a safe place to do business. We have stability.
Really, even though we have 1.3 trillion in debt and 1.5 trillion in bonds out there, we seem like a good bet, huh?
Yeah, I'm with you. We always make the case that we have a low debt ratio. But, we don't talk about how our productivity levels are low. We don't talk about our GDP per capita. We don't talk about, quite frankly, that we have, which I find interesting. We are going on what we're talking about, a technical recession, but yet at the same time, our bonds are attractive.
That's I don't understand how that aligns. That's kind of where I was going with this. Now, okay, here's my other question.
Yeah.
If we aren't on a growth pattern and the US is exceeding, if their bond yield is exceeding ours, do we not then have to go to the marketplace with a better value, with more interest for investors? Do we not then have to enter with a more attractive product to the market? And if so, how can we afford to do that? Because doesn't that then lean on all the projects that we're going to use the money for?
Yeah, exactly. Well, it's interesting because, our defense projects. So we've got some big projects coming up. So infrastructure, defense, housing, productivity initiatives that we put in our budget. So what we're going to the market and we're saying, please come in and finance these.
Essentially, that's exactly what it feels like. The timing on it is exact.
Yeah.
Yeah.
And that's what we're doing. So we're basically going to market. We're bringing in foreign. Now, the issue becomes, what happens if, and no one talks about it, what happens if there's a downturn in the market? So you can't take care of these bonds.
Right.
So you have to renegotiate the bonds. You have to come up with other arrangements.
I suppose that could happen. It is a financial arrangement.
Well,
and
yeah,
you've got
sure.
these investors there. If the bonds start to fail,
the security is the government.
Right.
And the people. So we elect the government. The government goes out and creates the policies. They've told us in a budget they want to do infrastructure, defense, and housing. Now they've gone to market. And now all these firms. Now, this is interesting because we just did a show on Kuzma, Mike.
Mm-hmm.
So we're actually going to have a negotiation with a country that is now buying up a substantial amount of our bonds on the market to get into those sectors. It seems odd, doesn't it?
Yeah, that we're negotiating on one page on one day, and over here selling investment in these very same things that we're. Well, it's interesting that you say that, because one of the things that crossed my mind just now was, okay, so now we've got this much in bonds out there at 1.5 trillion. Does the arrangement now change with, in the face of tariffs that we saw this morning?
Mm-hmm.
Trump jetting right over Kuzma and adding Trump's tax or the tariff of 25% in a lot of cases, an additional 10%. How does that affect our bond rating, and how does that affect our ability to service the bonds?
Yeah.
It's got to have an impact.
So in other words, of course it does, right? So if you can't reach an agreement, the market goes soft. You can almost create your own outcome because you have. Now, the other thing that
he gets to write his own script on that one because we need bailed out, essentially.
The other one we talked about, which is the vulnerability. Say the AI bubble busts and he's got to actually pull his money back.
Yeah.
Because he's loaning the money, right? He's actually giving the money, buying the bonds. He's got to say, okay, I'm now going to either pay the penalty or the bonds come due. I'm going to take them out. I'm going to take them back because I need the money back at home. We're vulnerable to that because we've taken the foreign investment. Whatever's happening in their world now impacts our world.
And as they
we get dragged along.
And as they exit this bond, even though they're paying a penalty, we're going to be, I'm just guessing, and please tell me if I'm wrong, we're going to be borrowing from Paul to pay Peter.
Yes.